Okay, so we just did like a little lightning round on Bitcoin mining, AI, HPC. And this is actually a great panel because we have, I'd say, like investor, we have operator / retail hosting, definitely have like energy and operations, and then we have regulatory. So you guys kind of got like the broad strokes from every perspective. Meltem, I want to start with you. Your background has been a lot in investments and energy, so like perfect confluence here. Can you paint the picture for what people should be thinking about when we're talking about AI, HPC, and Bitcoin mining all together? Like, why are we on a stage talking about that right now?
Yeah, I think that the bigger story and why I started my firm Crucible, what we're focused on is the emerging data center economy, right? We went from 15 years of investing in SaaS, in applications, in software. Now there's sort of a hard pivot back to hardware and physical infrastructure because we need so much physical infrastructure to support all of these applications and all of these new compute verticals we're trying to build. And what's been interesting to observe, and what I think is amazing, is really over the last decade, Bitcoin has been the only industry in the investment landscape that has directed tens of billions of dollars of capital into hardware and net new semiconductors in the form of ASICs, FPGAs, and other chips. Ethereum mining, directly responsible for the GPU boom and NVIDIA's stock rally in 2017, 2018, and again 2020. So hardware investing driven by the Bitcoin sort of economy. Data centers and data center electrification. Bitcoin miners today have a really valuable asset. They have long-term PPAs or power purchasing agreements at very low cost. And then lastly, this business model of Bitcoin mining being demand responsive, meaning you can turn your data center on or off. You can either draw energy from the grid in times of low demand or contribute energy back to the grid by shutting off Bitcoin mine sort of with a flick of a switch. That ability to be demand responsive as a compute data center, I think, is something Bitcoin has really done exceptionally well. And so I'm really excited about this new generation of hardware, data centers, electrification technologies, as well as sort of software and orchestration tools to help people better manage these really complex demands that are going to be placed on our physical infrastructure in a very aging grid. And it's been great to see, like, Bitcoin has really led the way. I do not think the AI boom would have grown as rapidly as it did if we didn't have 10 decades of incredible growth in the Bitcoin mining space being led by some of the people who are here on this panel. So it's a really exciting time to be an investor. I think it's an incredible opportunity. And again, I think Bitcoin is just so unique in the way it is mined and the way proof of work works. And fundamentally, Bitcoin is the only cryptocurrency today that is tethered to thermodynamics. So we talk about first principles all the time. Like, it doesn't get more first principles than that.
Thank you, Bitcoiner. Naz, you've deployed this stuff. I mean, you're an energy first guy. You're in the energy industry for 20 years, and then you're like, Bitcoin is how we're going to grow from here. Like, tell me about your first company and like how you guys pivoted into Bitcoin mining, where you guys are now at TeraWulf.
Yeah, Nazar Khan here. Similar to Meltem, but from a different perspective, right? Our business for 20 years was we developed, owned, operated power generation facilities both domestically in the United States as well as overseas jurisdictions. And so we were on the supply side, and I used to run around the world trying to find where is the best place to put power onto the grid. You know, where is there demand? Where does the transmission exist? How can we move power? And how can I ensure that the kilowatt hours of electricity I have are the most valued? So that's what we did. Starting, you know, I'd say in 2015, 2016, we started to notice a distinct change in that business model. And it was largely driven by the fact that the entire supply stack there's a massive push to decarbonize it. So the characteristics of how the supply stack worked were changing. You went from a system that was heavily dependent on dispatchable resources to a situation where all of the assets that were being retired were dispatchable, and almost all of the assets that were being added were intermittent in nature. And so now, rather than using the supply side to balance the grid, you were forced to kind of use loads to balance the grid. And so once I understood how Bitcoin mining worked, to me it was fascinating because a extremely economically responsive load that in any 10 minutes you knew exactly what you were trading off was in some sense mind-blowing in terms of a tool that can be used for the grid. So we really kind of pivoted and moved into being a load with this understanding that this is going to be the most effective way to kind of optimize a kilowatt hour of power. And so that's where we started. You know, we ramped up, in Montana and then kind of built up TeraWulf, and that's been our play. And so it's interesting now because we're seeing that same theme playing out again in the AI space. Again, you have these large demands of electricity. And what's different is that when Bitcoin miners came on the scene, we were the little guy, the little person in the room. We were trying to, make our way. People in the beginning probably, dismissed us, and then later on, kind of, continued to dismiss us for other reasons. AI is coming from a different perspective. You have some of the largest companies in the world saying we need large scales of power, and again, the loads that they're bringing are very inflexible. And so, in my mind, something has to give. Something has to give either from the supply side, right? There needs to be a massive ramp in supply, or from the demand side in the sense that these loads need to be more responsive than they have been traditionally. And so that's kind of the theme that we're playing on the AI side, which is an extension of the very theme that we're playing on Bitcoin mining.
Okay, so our topic here is Bitcoin mining grows up, and Kyle, your presence here as the regulatory guy just kind of proves that it is growing up, right? Like the fact that we have people focused in Bitcoin mining companies on regulation speaks to that. Tell me a little bit about the intersection between the clean energy that Naz is talking about there, and then this digital currency that bureaucrats seem to hate called Bitcoin.
Yeah, is this on? Okay, there we go. Yeah, I think it's certainly a testament to the professionalization of the industry over the past 3 years that you do have a lot of public policy people working in the space. And I think that's just as much a result of scrutiny from the government into an industry that was nascent, I think is growing more and more professionally. I do think we get a lot of undue scrutiny sometimes, and that's due to a certain generational issue. I've been doing this for 3 years now in Washington and at the state level, and I can certainly say that this is much more of a generational issue as opposed to a partisan one. And so that's something we try to stress to policymakers when we speak to them all the time at Foundry, since we do have clients in a lot of different states that are both, that lean blue and red.
Gotcha. Okay, Chris, we're going to go over to you because you represent Compass Mining. You guys have megawatts deployed all over the U.S. and even more than that. I think there's some sites in Canada still.
Yep. Canada too.
Okay, tell me about the actual implementation of putting Bitcoin miners into the ground, putting megawatts into the ground. What are you guys finding as you're deploying 10 megawatts here, 15 megawatts there? What's the local interpretation of AI, HPC, and Bitcoin mining hitting the ground in these jurisdictions?
When we're looking at the small scale, you mentioned 10 megawatts. That's not really where the hyperscaler is focusing for AI ML. They're looking for partnerships like with TeraWulf and larger operations where they can deploy massive capacity. The limitations still in building data centers come down to PPAs. It's locating low cost of energy, and then it's being in a favorable environment where the jurisdiction wants you there. There's not necessarily regulations that are going to make it difficult for you. That regulatory environment thinks that AI ML is wonderful. They're happy for it in most cases for that compute. There's certainly outliers. Then Bitcoin mining still has a reputation where it needs to sometimes, let those energy companies know that we have matured, we have grown up, we are capable of taking long-term PPAs and being a good partner in that environment. Was that helpful, Will?
No, that's great. I actually want to double tap with you and ask about just monetizing these assets. So for the regular guy, Compass is focused mostly on retail, maybe small private, and you guys are allowing people to mine Bitcoin that way. Walk me through that. How are we going to see retail enter into what has mostly been a job of mega industries, enterprises, hyperscalers like TeraWulf?
There's a couple perspectives. I think from the retail perspective, you should be excited if you own, 1, 5, 100 machines. You should be excited to see all of the large Bitcoin miners pivoting their compute and their resources and their infrastructure towards AI ML. So hopefully what you find is a difficulty adjustment. And now therefore, if you have exposure to Bitcoin mining, that your number go up, your miner economics just improved. If you're an individual in that retail environment, you're not paying attention to AI ML. If you're a retail operator like Compass is, it certainly makes sense to be forming, board level committees and looking at how do we press for this sort of technology? How do we make sure that we're forward? And I'll end with this. It's about the infrastructure. It's the access to low-cost energy and the electrical infrastructure that's on site. If you have both of those things, there's an opportunity in AI ML.
So Meltem, you brought up an interesting idea, and we're going to stick with this asset idea, is like you can long a PPA through a Bitcoin miner.
Yeah.
Can you like walk that out to the crowd that might not know what a PPA is in the first place, and then explain that?
Okay, yeah. So I think if you have, so thinking through this as an investor, right? I have incredible conviction that over the next decade, the data center economy is the most important segment of the US economy and just the global economy, right? So if I have that conviction, how do I trade that today? Well, the compute value chain starts with CapEx, right? It starts with a chip. Then I have to rack the chip somewhere. So then I have facility build out. I have to electrify that chip, meaning I need power. Then I have to use that chip to do computation. I can be in the business of running a large scale operation. I could sort of do my own compute if I want to run my own bare metal, or I could now use some of these distributed compute protocols, right, and leverage this sort of piece of equipment to do compute on sort of this aggregated scale through these marketplaces that allow you to aggregate compute. And then there's kind of the normal sort of managed services workflow where you have customer service, billing, et cetera. Okay, so in that workflow today, where can I go net long this thesis? On the CapEx side, why did NVIDIA go from not even a top 10 stock to, for a brief period, the most valuable company in the world? Because buying NVIDIA was really the only way to go along the CapEx thesis, right? And you have ARM, AMD, some other chip makers that are benefiting as well. Then in the second step, how do you go along power? Well, we saw Constellation had a big rally because 3 Mile Island, this nuclear reactor, they just signed a $16 billion deal with Microsoft for 20 years of power. But there are not really a lot of ways you can go long power. And power markets today are suffering from extreme dislocations due to demand for long-term PPAs, but not enough supply on the grid to meet that demand. So PJM, which is a big auction that happens for the year ahead curve, 2 months ago, it cleared at 9 times the price it cleared at a year ago for your forward power. So the forward curve for these things is fundamentally broken, right? And what I think is so cool about Bitcoin miners, if we look today at Bitcoin miners versus data center operators in terms of public equities, Bitcoin miners trade about 8x lower in terms of dollar value per megawatt of electrified data center capacity than data center operators. So there's a huge discount on Bitcoin miners, I think. So what I was asking, Nazar about was, how do we close that gap? Because I obviously own a lot of publicly listed miners. I think there's a huge opportunity there to close the gap. There's one market dislocation. But what I'm really excited about with Crucible is we can also build new power markets on chain. Already what we see is there are a lot of grid electrical assets that are not grid connected yet. So it could be a big solar installation. It could be someone consuming nat gas directly from the pipeline. There are a lot of these instances where you don't have electrons that are grid connected, but there's no reasons that those electrons can't be tracked and traded. So there's a few companies now that are looking at different ways to create ways that people can trade power. And so I just think there's this whole opportunity set. What Bitcoin has done so beautifully over the last 15 years is built an entirely new capital market with its own contract, the perpetual swap, that trades entirely out of the existing capital market structure. And I think we're going to do it again with these commodities, electrified sort of assets, like data centers, right? That whole value chain, I think, will be traded. It should be traded on chain. It should be global in nature. And that's what I'm excited about. So I think it's a huge opportunity. Go along Bitcoin miners, go along sort of the compute value chain, but there's an incredible opportunity. And it's not even AI demand, right? We think about demand from EVs, just broader demands because of all of the digital infrastructure that's being developed. It's a no-brainer in my view. So I don't really know if you're not going along the data center economy thesis. I don't know. Find God.
Naz, we cannot ask you to talk about your stock price because that would be illegal. But we can ask you to comment on how do you get funding for these projects in the first place? I've had your CFO on our podcast recently, and he gave a lot of thoughts around the specifics of using debt versus equity or using Bitcoin to fund something, the ethics of an ATM. But in general, when we're talking about these facilities, they're quite expensive. It's not a simple process to stand up. Yeah, it's of megawatts.
So I'll run through the quick math. For Bitcoin mining, both the ASIC and the infrastructure, you're around $1.5 million per megawatt all in. So you put up your building to run the Bitcoin miners, and you call up your friends at pick your ASIC manufacturer, and they send you equipment. It's about $1.5 million all in. To date, I'd say over the last 18, 24 months, the vast majority of that has been equity funded. So most of the public listed miners have used ATMs, and so almost all of that has been equity funded. What we're looking to do in the AI space is, again, put up the infrastructure. We're not buying the ASIC equivalent. We're not buying the GPU. We want to partner with somebody who's going to be long the GPU and who knows what to do with it. We don't think our job is to kind of figure out how to optimize the value of the GPU. So we're going to spend $6 to $7 million per megawatt just on the building, which is 4x what we're spending in total, both for the building and the equipment on the Bitcoin mining side. The big difference is the capital and investor base willing to invest into that is significantly wider and larger. And so what we're finding is if our pool of investors used to be this, our pool of investors is now this. And that comes in all different flavors: equity, debt, hybrids, and kind of anything you can kind of think of. And so the big challenge is, can you build it, which I think we can, and we've shown the credibility to build it. And can you find a customer who is well capitalized enough to use it? And that's important because every megawatt of AI load takes roughly $30 to $40 million of hardware capex, $30 to $40 million of hardware capex. And so even a 100 megawatt project, you're talking about a lot of absolute dollars that you're going to have to spend. So what we are finding, again, is that the counterparties that we're working with have to be well capitalized as well. And therefore, now the chain of investors kind of coming in can now pick their spots. To Meltem's point, they may want to be, hey, I'm long the GPU. I want to have that exposure, and this is how I'm going to play that. I want to be long the infrastructure, the picks and shovels are going to allow the GPU to operate, and this is how I'm going to play that. So we think that, we can kind of finance that $6 to $7 million, 30% equity, 70% debt, and even on the equity portion, we think through customer prepays, we may be able to cover quite a bit of that. So if we can kind of get things going, and the reason, we are big believers in where our, company is going is that over time, we think the net impact on equity dilution should be very nominal. Because once we kind of get that going, once we get customer prepays in, and we're generating free cash flow from that business, we can kind of keep recycling that. And so the big distinction that I think time will tell is will Bitcoin mining remain kind of equity funded, all right? Or can the Bitcoin miners get to a place where they can kind of reinvest in the business through free cash flow and keep growing? Versus, again, on the AI side, can it be where it's, nominal equity, where again, between the equity that you need to fund and prepays and the cash flow that you're making and the debt, can you kind of keep going? So that's where I think the multiple arbitrage exists as well. Is I think we're telling the story, but we have to show that we can deliver on the story. And if we do, I think, the arbitrage that Meltem mentioned.
Let's jump on multiple expansion miners.
The multiple expansion that Meltem meant is available to us. So we just really have to kind of execute.
Kyle, you're going to get the last question here. We're in New York State. New York City is probably the most wealthy city in the American empire. And we have the long Bitcoin / data center trade. Why is New York so hostile against, one of the most valuable trades? And is that going to change?
Well, like we talked about before, this is certainly a generational thing. We will see new leaders come in. In fact, some of our biggest supporters are from New York. Richie Torres, congressman from the Bronx, is a big supporter. But yes, I think there's this industry, especially Bitcoin mining, it touches on a lot of sensitive issues, energy usage. It touches on the very underpinnings of our financial system. And so there are a lot of people who have been in power for a long time who don't like to have those things questioned. But I do think we are going to see a shift politically in New York, but also just across the nation on the topic of crypto, as some of the elder statesmen retire and we have some new blood that enter in. Because as you've seen from the Stand with Crypto and all these different things, you're talking about tens and tens of millions of Americans who are participating in this new technology, either through investing or building. And so It is inevitable. Technology is on our side. Time is on our side. The politics will always follow.
Awesome. Thank you to Messari and Mainnet for making this possible. We'll be off stage if you want to chat with anyone about longing Bitcoin miners. Thank you.
Not financial advice.